Good afternoon. Today's video is a review of the expansion day. It's where structure turns into profit. If reset day is where the market prepares for a move, expansion day is where it all comes together and pays. This particular day is where most traders think they are trading. As a matter of fact, most traders think almost every day is an expansion day, but rarely is that true. Expansion day, it requires patience before it, which we know to be a reset day. It also requires aggression during it and, of course, discipline to stay in it. What is expansion day? It's a high momentum trending session. It's the phase where the market leaves consolidation, breaks key levels, establishes direction, and delivers range. It's an intentional movement backed by liquidity that was built from the prior sessions. No reset day, it's balance. Expansion day is imbalance. The market expands aggressively and decisively in one direction, using trap traders from previous session as fuel for the bigger move. This is typically the most tradable day type for momentum traders with strong continuation setups. There are three building blocks that fuel expansion day. These three have been back tested and most importantly validated across hundreds of sessions. You've got liquidity from reset day, clear reference points, and positioning imbalance. Liquidity from reset day, it traps both sides, buyers above highs, sellers below lows. Expansion day, it uses those trap traders to fuel a directional move. Clear reference points. Reset day establishes current highs and lows, including equilibrium, while expansion day breaks away from those levels with conviction and purpose. Positioning imbalance. The market moves aggressively in the opposite direction of the side that is trapped. Expansion day feels fast because they are. What does our back testing prove? We didn't just make up labels, we've poured years of hardcore development into this. Back testing, real market refinement, creating proprietary ES trading algorithm that defines cycle structure, gap relationships, algo level interactions, and intraday range behavior. They have been tested across hundreds of sessions. It's a powerful system. It's got high probabilities. It's designed specifically to spot consistently proven edge setups on ES futures. Many of our traders, they use the ES levels to trade SPY and SPX options. Some of our traders, they trade all three. Pattern 1 on expansion day. Breakouts have follow through. The data shows that on expansion days, breakouts, they're not traps. They are signals revealing significantly higher continuation after level breaks, reducing the probability of full reversals and offering strong acceptance beyond specific key zones. This is just the opposite of reset day behavior, where you'll notice that breaks often fail and traps are very common. Pattern 2, range expansion is consistent. On expansion days, we have larger than average daily ranges, clean directional extension, and minimal range overlap. Larger than average daily ranges, they produce significantly larger ranges than typical chop days. They offer real opportunities for momentum and directional traders. Clean directional extension, that allows price to move with purpose in one direction with minimal whipsaw, and clean trend development throughout the entire session. With minimal range overlap, we have the opposite of reset days, and volatility works for you and not against you. Traders feel more confident letting runners develop on it on expansion day. It allows the trend to pay and they scale out along the way. Pattern 3, gap behavior that aligns with direction. One of the strongest edges we've encountered is when expansion day aligns with a properly positioned gap. The probability of continuation increases dramatically. So for example, if we have a gap above range, the continuation is highly likely, whereas if the gap is below range, the continuation lower is again highly likely. Gaps hold, unlike reset days, gaps don't fully fill. Pattern 4, structure holds under pressure. Structure, it's respected on expansion days. There's a difference to remember here. Levels don't just break, they hold. Backtesting shows break plus retest continuation has very high probabilities. Pullbacks remain shallow and trend integrity stays intact throughout the day's session. Identifying it early is key. The prior day is reset behavior building liquidity. The market opens with intent, opens with a gap, and also it's moving with a strong drive. Price reaches our algo levels and reacts cleanly. The market cycles align with continuation. how to properly trade expansion days. You want to separate yourself from the amateurs here and you want to trade like a professional. Here's the correct systematic way to approach it. You want to trade with direction, not against it. Fading, it's likely a low probability move. You want to align yourself with the break direction, the momentum flow, and the structural continuation. Use break and retest entries. Levels break, price holds above or below, and a retest occurs. Enter expecting a continuation move. It's a clean, repeatable, data-backed setup that can be repeated over and over again. Add on strength, not weakness. Never average down. We add when the trade is working because expansion days support continuation. It's building a trend and we see momentum stacking. And of course, let that trade develop. Expansion days extend further than most traders expect. Leaving a runner or two has proven to be very worthy. We trail intelligently, we scale out gradually, and we stay aligned with the move. Common mistakes and the real edge. What most traders do wrong. Fading strength. I think we've all done this before. Thinking it's gone too far when it's just getting started. We've all sold a little too early just to watch it run another 5, 10, 15, 20 points. Taking profits too early, grabbing small wins and missing the full move. This is why it's always good to leave a runner or two and just trail it. Not re-entering, exiting once and never getting back in on pullbacks. If it comes back and it tested the level, there's a good chance it'll continue to move back in the opposite direction. Trading too small, risking big on chop days but hesitating on the best day. I'm sure that we've all done that as well. Well, now you know expansion day is the day that you want to like level up another level there. The real edge. The edge, it's not just identifying expansion day, it's trusting it. When you trust the data, you hold longer, you size appropriately, and you stop fighting the momentum. Expansion day is where structure becomes opportunity, liquidity becomes fuel, and patience becomes profit. This is the day that can actually define your entire week. Over time, you will learn how to properly trade expansion days, and you may find yourself only trading this particular day of the market cycle. That's totally up to you to decide. So take your time to learn it so that you can earn it. In the next video, I will discuss exhaustion days.